Then we are also humbled and blessed to have presentations from MORINGAWAY, our colleagues from all the way from the world. And I believe that today we are going to have very interesting discussions. We have players along the value chain, the ecosystem. We have people, microfinance owners, we have SACCOs, we have managers, literally all the way into our ecosystem of microfinance. So colleagues, today I really want to appreciate you for all those who came in before time. At least we know that the saying that we can't wait for Africa to develop. This is the time, this is the day that bring things, good things to our ecosystem. So today we are focusing on how do we take advantage of credit rating reports. We also look into the aspect of the testament and, you know, the credibility and the capacity to fulfill financial obligations. For the MFIs, we often, of course, you know, work with, I know in the sector of MFIs, people work with clients who are lacking, I could say, various important aspects in the ecosystem. That is, we're talking about collateral, we're talking about a good credit rating, you know, and this at the end of the day is the basket or the fruit that gives us the trust in the financial ecosystem. So if we can manage to look at the credibility and the capacity to fulfill these obligations, it means that for the MFIs to work with clients that are lacking all this, today we have to discuss the benefits so that people can then understand, and then we open up the discussion so that in the ecosystem of Uganda, how do we dive in deeper in these aspects so that the people who are coming in to talk, you will realize that there will be pillars at which they are holding on to that will be able to collaborate with the information that we're going to receive. So we shall look at access to, for example, diverse funding sources. We all know that a favorable credit rating will open doors to diversify or vary the funding sources. So if domestically and internationally, this includes, you know, support from all investors, support from, as our colleagues are sharing the screen here, you will realize that the topic of the day is access to international finance. So if we are focusing on this as international finance, what then will help us to inform the discussion from what has been the usual to the unusual? So we're looking at the low cost of borrowing, we're looking at the enhanced investor confidence, we're looking at promotion of growth and innovation within the ecosystem. So this is the most important part. So at this moment, I will try to make sure that we go through the agenda again and the program as the next speaker, who will be coming from the Association of Microfinance Institutions in Uganda, that is AMFIU. We will go through the program once again as the speaker is going. I will introduce the speaker to you. We shall have Flavia Bwire. Then this is the manager of membership and financial inclusion. So as we await from her to give us these welcoming remarks as an association, we believe those are the issues and topics that are going to be touched on. So if Flavia, you can hear me, please, you're live, and if you can unmute, maybe you could share with the colleagues here today. Thank you. So I think as we wait for AMFIU, maybe Robert, you can help us check on that microphone and see if it is working. Colleagues, you'll But in the meantime, I'll be sharing, or as you can view on the screen, we have ICRA Uganda, as will be explained, or ICRA as a rating agency will be explained in the presentations. We are looking today on how can we be in position to unlock international financing and have to make sure that Ugandan entities like SACCOs, microfinances can access international finance. Robert, if you can hear me from AMFIU, please, you can unmute the microphone and let's have a discussion from Flavia, the manager memberships and financial inclusion.
A very good morning to everyone. I would like to welcome all members that have spared time to join in this webinar. My name is Flavia Wire. I work with AMFIU. I'm the manager for membership and financial inclusion. I want to welcome all members that have joined this call and also to appreciate very much the other stakeholders that have joined in this discussion, UMRA, PSFU, FSD, and BOU. We want to thank you very much. As AMFIU, we're always looking for opportunities that can better our member services, and this is one of such opportunities. The issue of credit rating is very important and has various opportunities that as a practitioner, as an institution, you can tap into. And some of these opportunities include knowing your performance, knowing your areas of improvement, improvement in the areas of governance, and access to funding from external funders or interested funders who may support your business. I must say that in Uganda, this is like the beginning, where we've had a rating company locally here, and we want to welcome UMRA so much for having come into this space. It may be like a new concept to many members, and we encourage them to take this topic with a lot of interest and the benefits that will come with it. This is the beginning of the first activity, but we plan to hold many more such events, including physical encounters, where the members can interact with the investors, the funders, to understand more. And we ask and call for members to please take on the initiative very seriously as we develop the sector to go forward. I want to wish us very nice, good deliberations, and to the members, this is the beginning. We need to pick up from here. We need to be attentive, ask as many questions as we may want for more information so that we move the sector forward. I want to once again thank the other stakeholders in the industry for having joined in this discussion, which I know will take our sector forward. Thank you very much. I wish you very good deliberations.
Yes, thank you very much, Madam Flavia. This gives us confidence that at least as an association, that we know as an umbrella organization, as an umbrella, as people who have been in the sector for quite a while, if you give confidence within the ecosystem that, you know, together we can fight the whole capital issue, the whole area whereby we know that we want to promote growth and innovation in the sector, it means that it shows that the microfinance sector, which has been vividly seen growing rapidly in our ecosystem, has evidently been, the figures do not lie. So definitely, I think it's very important that ICRA has come in here to bridge this gap as a third party, opinion validator, as a third party person who comes in and gives in reports and all that. It's a new concept as credit rating, but as we go, we believe that in the time we're existing in Uganda, which is, of course, I think we're about to even make about a year in existence in Uganda, but with over 25 years of experience along the way, as they will be explained. I think I would like to take this opportunity as well to request maybe the team to see how Rachel from UMRA, I think they're trying to join us in because they're the next speakers. But before we invite the next speaker, I would like to again appreciate colleagues who have joined in on this call. And I want to take you through, as the moderator, the program, the agenda, as we have already knocked off one item on the agenda, and those are the welcoming remarks from AMFIU. We shall have a communication from the regulator, that is from UMRA, that is the Uganda Microfinance Regulatory Authority. We shall also have the regulator. Then we shall also have a presentation from the ICRA Global Team, from the director, who will also make a presentation later on. Then we shall also have to hear from the horse's mouth, the people with the money. And that is what we understand in Uganda. People in the microfinance sector will tell you that it's all about money. So the people with the money will also present. That is our colleagues from the morning away. I see Jose and Ishrad. You'll forgive me with the pronunciations, but we are all one in one room today. Then we shall also have a communication from, or remarks from the National Insurance Corporation. It's also, we have colleagues in the building. And I believe we shall also give chance to colleagues who have joined in today to have a Q&A session, but that will be in a controlled manner. And I'll also expect people to keep in the comment section. We are in the chat room, colleagues. Put each question, anything you would like to share with us in the chat room. Feedback is important in this sector. I believe, Rachel, can you hear us loud and clear? And can you confirm that you can say something? Rachel is from the Uganda Microfinance Regulatory Authority, and she is the manager microfinance institutions, meaning that in the docket of the regulator, you understand the sector better on the perspective of the regulations. Rachel, if you can confirm. Yes, I'm seeing someone in the chat saying SACCOs. Yes, SACCOs, you are also welcome. This also qualifies for you. We are not going to try to say that SACCOs, this is only for microfinance. This is, I think, Ategeka. John Mary, we are with you. That's why probably you even received the invite, or you have managed to get this information from the SACCOs that we are involved in. So SACCOs and microfinances, this is the time to revolutionize our sector. We are following the financial inclusion strategy. We all know where Uganda is going in the next 5-10 years. We have development plans. So I think it's at this juncture, maybe when I would like to call in my director from ICRA International, or ICRA Rating. This is Ms. Vela. She's the Chief Operations Officer and the Director with ICRA. Maybe Ms. Vela, you can take us through, as we shall hear from Rachel when we can manage to fix her technical issues. Thank you very much. Over to you, Madam Vela.
Thank you. Thank you for that, Laban. So while waiting for Ms. Rachel to join us, allow me to present ICRA and what we do. So again, good afternoon, everyone. And I hope everyone is doing well. First of all, allow me to introduce myself. My name is Javela Makalalad. I'm one of the directors and also the CEO of ICRA Rating. And today we are here to discuss and understand credit rating and how it will give access to international finance and how we can get funding and also investment opportunities for Uganda microfinance institutions as well as licensed SACCOs members. So we have here with us my team. I think I've got many from my team as well who has joined us. And I would like to take this opportunity to thank each and every one of you for attending this webinar. So today's webinar is a strategic collaboration with PSFU, or Private Sector Foundation Uganda. We also have AMFIU, which is Association of Microfinance Institution in Uganda. We have UMRA as well, Uganda Microfinance Regulatory Authority. NIC, we have our colleagues there as well, National Insurance Company, and MORINGAWAY, our partnered international investor. So this wouldn't be possible without their support in organizing this said event. So to begin with, let us know about ICR Rating, and I'll be sharing a brief introduction about us. So we are an international credit rating agency. We are a financial analysis firm that provides multiple activities to clients who are into different industries. So basically, our services includes credit rating report, and ESG rating, ICRA scorecard as well. So these services can enhance a credit profile and also gives recommendation based on transaction review. So we are one of the fastest growing companies as well, with a presence across Europe, Africa, Southeast Asia, and we provide information, tools, and also expertise to help customers take a confident decision to mitigate any commercial risks. So just to share with you ICRA's achievements and group's licenses and memberships. So basically, our parent group is into financial services, and we have multiple offices in Asia, in Africa, and also in Europe. Also, we have multiple licenses in several jurisdictions, like accreditation from Bank of Tanzania. So we are the first and only credit rating agency to be approved by the Bank of Tanzania or Central Bank of Tanzania. ICRA has also been recognized by the Bank of Uganda and first ever credit rating agency to have base in Uganda itself. Recently, we are proud to share as well that we have been licensed by Securities Exchange Commission of Pakistan for being a credit rating agency there also in Pakistan. Moreover, ICRA also has a membership and certifications like ISO certificate, member of Forbes Council, as well as BIIA. We are part of Dubai Chamber of Commerce as well. We have the CPD member and ITFA as well. So furthermore, we have signed a lot of partnerships and MOUs with TCCIA, or Tanzania Chamber of Commerce, Industry and Agriculture. Our valued partner, which is Credit Info in Tanzania and Uganda, who I believe is also present here in our webinar today. We have TAMFI also in Tanzania, or Tanzania Association of Microfinance Institutions. We also have presented to 20 banks for preliminary estimated credit ratings of Tanzania banks, together with Tanzania Institute of Bankers. And in addition to this, we have signed our MOU also with PSFU, who is our partner in doing this webinar today. We have with ZNCC, or Zimbabwe National Chamber of Commerce. We have Addis Chamber of Commerce, and also WABA, which is West Africa Bankers Association. So ICRA has conducted many investor webinar in Tanzania for microfinance institutions, regulated and also based in Tanzania. We have done webinar also it was just very recently. We also have done webinars in Uganda for commercial banks regulated who are based in Uganda, and also webinar for loan syndication with International Bank in Tanzania for banks and corporates who are based in Tanzania as well. But what are the services that we do? Now, let's come to the services. What are the services that ICRA offer? What is rating agency? Is everyone aware about rating? Why is it important to get rated? What are the benefits? Especially, what are the benefits we will get, and what are the usages of it? So these are just some, few questions that we will be discussing during this webinar. So International Credit Rating Agency, or ICRA, like what I have mentioned earlier, we are into issuer of financial credit rating services. We assign long-term ratings, not just for corporates, but also for financial institutions as per our methodology. So we are fully licensed and operating in Dubai, in Tanzania, especially in Uganda. We have a proper operating offices there as well, and in Zimbabwe and in Zambia as well. However, yes, UAE is one of our headquarters, and Uganda as well. So I know one of the services that we have, we call it as issuer credit rating services. So an issuer credit rating services, so it is a credit rating. It is an independent assessment of a corporate entities or financial institutions' credit worthiness in general terms, and helps any organization build a strong credit profile. So it shows their capability for growth of the business and also repayment capability against any debt. So these services is mostly beneficial to banks, financial institutions, and also corporates. Next to this, we also have our ESG rating. So one of today's most important, topic globally is ESG. I'm pretty sure everyone present here with our webinar today are very well aware of that. Institutions and corporates, they try to attract more investors, showing their initiates and also show what policies they have in place for the betterment of all three important nodes, which is environmental, social, and also governance. So ESG rating is an assessment of all those policies and initiatives on the institutions and corporates. Next to this, we have our ICRA scorecard. So ICRA scorecard, it serves a comprehensive tool for assessing the initial risk of profiles of both retail, individual customer, and also corporate clients who are seeking credit and borrowing services. So we have made a risk scoring platform, and we've already launched it, to be honest with you, and it's a free of cost for everyone. So it is a country-specific back-end calculations, assigning risk scoring on retail and also corporate clients based in information they will put in it, or they will, type it in. So other services we are also providing value-added services like helping clients get access to funding and also investment opportunities. So ICRA, we have a great partnerships with international investors and also venture capital firm partners based in the Netherlands. We have in Mauritius, we have in South Africa, Switzerland, and France, who are looking to invest in established corporates, banks, financial institutions, and also microfinance institutions, and that specialize in helping businesses expand globally. So by working with these partners that we have, we can connect businesses in financial resources that they need to fund the growth and also succeed in the global market. So we are very honored to have one of our international investor partners with us, which is MORINGAWAY, to join us and explain and give their thoughts on how credit rating is important on the assessment for their funding opportunities. Next to this, of course, we have technical and also regulatory on how we are conducting the credit ratings. So one of the ICRA objectives is the ICRA rating policies and also and procedures it is meant to be very helpful to resource for regulators and also for those who seek examine how ICRA functions and how credit ratings are used by market participants. So there are below, you can see on your screen the policies and procedures collectively aim to uphold the integrity of ICRA and promote investor confidence. So part of it, we do quality and integrity in the rating process. We have this confidential information as well, independent and conflicts of interest, and transparency and timeless of rating disclosures. ICRA policy for credit ratings. So it is a comprehensive evaluation conducted by ICR 18 to assess the credit worthiness of issuers such as corporations or financial institutions. Part of it, we do the initiation of rating relationship. Of course, we gather and use the collected information. We also interact with the management of the issuer or with the client. we do a proper assessment. We do have a proper assessment phase. Then next to that will be the decision phase, dissemination phase, credit rating appeals, monitoring of the credit ratings, and part of it also is withdrawal of credit rating if needed. So here we have our credit rating scale. So ICRA National Level Credit Rating Scale has 10 different rating categories spanning from AAA, which is the highest rating, up to D, which means the lower rating. In addition to that, ICRA defines another level as NRA, or we call it as no rating assigned, for the issuers who are not eligible to get a rating due to different circumstances. Let's say they're not able to provide proper documentations or incomplete documentations. Then we mention as NRA. Below are also on your screen are the detailed breakdown of it. We have investment grade and speculative or non-investment grade. And lastly, we have the default or no rating assigned. Default, we categorize it as D, and for no rating assigned, like what I have mentioned earlier, it's NRA. So yeah, here we will be discussing about the credit rating outlook. So all the above ratings which we have discussed earlier are followed by a rating outlook as follows below or here on the screen. We have here positive outlook, which means the entity's credit worthiness is expected to improve in the near future, potentially leading to a rating upgrade. A stable outlook, meaning like the entity's credit worthiness is expected to remain stable in the near future with no significant changes or anticipated. Negative outlook, the entity's credit worthiness is expected to deteriorate or potentially leading to a rating downgrade. So this will be advised depending on the rating assessment that ICRA rating will be doing. So ICRA for non-depository FI, we follow such rating methodologies. So the ICRA non-depository FI credit rating methodology is designed following the foundation principles of AMLs. It is an AML framework. So this is a combination of globally recognized standards in ICRA approach, underscores the commitment to elevating local credit assessments to international benchmarks. So by integrating this framework, we ensure a meticulous evaluation of non-depository FI aligning with global best practices while catering the unique and nuances of the local financial landscape. So this reflects our dedication to delivering precise, transparent, and also globally competitive credit ratings. So yeah, like what I have mentioned, we follow AML's framework, which is widely accepted a supervisory tool used by the regulatory authorities and non-depository institutions to assess the overall health and stability of non-depository institutions. So here you can see the acronyms of it, which is A for asset quality, M for management, E for earnings, L for liquidity and source of funds, and S for sensitivity. On the next couple of slides, we will see how we are doing our credit rating methodology. So basically, we have allotted a certain percentage for the weightages of which, if you will see on your screen, there are different components on how we do the assessment or the rating, how we follow our rating methodology. For business and model profile review, we are allotting at least 15% of it. Management quality, which is 10%. Industry risk, which is 15% as well. And of course, the financial analysis, which is 20%, and ratio analysis concerning the AML's framework, which is consisting of 40% of it. And in addition to that, we do rating assignment criteria as well for non-depository financial institution ratings. Here on your screen, you will see how we do the scoring chart for it. What are the weightages, which also has mentioned on the previous slides. What is the maximum score for it? What kind of assigned score, or which we normally calculate from, out of 10 of it. There on the lower right corner, you will see how we calculate the final score in determining the rating of the institutions. So yeah, ICRA also uses various rating actions to communicate changes in creditworthiness or risk of each and every entities whom we are doing ratings with. So these actions help investors and also the market understand the credit quality of the issuer. So on your screen, you can see the different rating actions based on the circumstances. So one of it's the rating upgrade. So it is more, a rating upgrade indicates that the credit quality of the issuer has improved. It means that the issuer is considered less risky and more likely to meet its financial obligations. Rating downgrade, it's self-explanatory. A rating downgrade signals a deterioration in the credit quality of the issuer. Basically, it implies that the issuer is considered riskier and may have higher likelihood of defaulting on its obligations. We have this rating watch as well, which is a temporary status that indicates the rating agency in monitoring a financial instrument or issuer closely. A watch status suggests that there is a higher likelihood of a rating change in the near future, either an upgrade or it can be a downgrade as well. Rating placement, it's similar to rating watch, but typically signifies a more imminent or certain rating change. It indicates that ICRA is actively considering a change in the rating. Next to that, we also have the rating affirmation, which means that there is no change in the credit rating. It remains the same. So this action indicates that after a review, ICRA has decided to keep the current rating in place. It's also possible to have a rating withdrawal. It occurs when a rating agency decides to discontinue its coverage or rating for a particular issuer or security. So basically, this action may happen due to a lack of information or for some other reasons. So this is pretty much about how and what ICRA services are. And
thank you so much. Thank you so much for organizing this webinar. It is a very important webinar for the microfinance sector. I'll begin by introducing myself, Rachel Vanessa Muhwezi, and I serve as a manager microfinance institutions at Uganda Microfinance Regulatory Authority. Maybe to talk briefly about Uganda Microfinance Regulatory Authority is a government agency responsible to license, regulate, and supervise SACCOs, non-deposit-taking microfinance institutions, and money lenders, not forgetting the self-help groups. And you are aware that most of the ones who have logged in are UMRA licenses, Uganda Microfinance Regulatory Authority licenses. To go back to the theme of the webinar today, I would talk briefly, if you may allow me, should I maybe indulge into different discussions for the webinar today, the moderator?
Yes, sure. Today, of course, you can give us the insight of all the discussions that have been happening throughout. Yes.
Yeah, thank you so much. To go back to the speaker, the presenter who was highlighted on a presentation, as Uganda Microfinance Regulatory Authority, we welcome ICRA ratings for our institutions because this might be a very important tool and very vital, which will attract more investors in the microfinance sector. So as you are aware that previously we had, I think, what we call credit reference bureaus, and their focus is more on the borrower to the lender. But here we are looking at the institutions themselves being rated and actually being put on the front line to be poached on by the investors. So when we look at the role of credit rating and why external credit rating might be very important for investors and also very important for investment, you would realize that credit rating is very important not only for the prospective investors, but for the entities themselves, like the microfinance institutions, the SACCOs, the money lenders, also the banks themselves. So it is a very important tool which would enable the institutions access capital at a lower rate, which is affordable in case they are found to have a low risk. The way they mentioned that when you have a low risk, you have a AAA. That is what I saw in the slides. And also when you have a high risk, then you are ranked D. So if you also fall into the trap of NRA, what I saw, you're not assigned any rate. It is also a very risk approach on the regulator's side. And to the listeners there, you could also realize that credit ratings are very important to the regulator because they may help us to identify the investment grade institutions for any incoming investor in the country. For example, we have the potential investor who has been looking for microfinance institutions where they can extend their international finance funding, the MORINGAWAY, who is on the call. So it is very crucial for the credit ratings because they'll help us to identify the investment grades for these institutions. MORINGAWAY will be able to actually find out institutions which have a lower risk assigned to them. And if it has a higher appetite for risk, it would also be able to see those institutions that are assigned a higher risk. But I'm very aware that most investors do not want to, they are risk averse. They wouldn't want to go into venturing with an institution which is of a higher risk. And also to the core, our microfinance institutions, the NDTs, the SACCOs, the money lenders, you need to look at your portfolio quality. You need to take this approach of taking up the credit rating because you can only be extended an external funding from the investors or from the international financiers when you have a credit rating. And we have, I think, UMRA is available in Uganda, and they will give us their contacts because they can do that assignment of ratings, of reviewing your profile, of reviewing your business operations, of reviewing your portfolio quality such that you can attract investors into your business. And I would also like to mention that in the regulator's point of view, rating helps on identifying investment grade institutions, which will attract more investors in the microfinance industry, contributing to socio-economic transformation of Uganda as a country. And this is hinged on the National Development Plan 3 and the upcoming National Development Plan 4. Still, when we still look at how credit rating data can attract more investors for the financial industry in the country, credit rating can act as a catalyst for investment inflows. The promise of reduced risk through ratings will entice investments across the microfinance sector, setting a stage for a robust expansion and a steadfast stability in the microfinance industry. So a strong credit rating is indicative of a lower risk, and it will attract a broader range of potential investors in the microfinance industry. And when we have more potential investors coming into the microfinance industry, this will promote what we call financial inclusion through more access to quality, affordable finance, and this will be used into the investment ventures. To still peg on the same, how the credit ratings can help the regulator guide on the regulated institutions more on their operations and portfolio quality. When you look at the slides that were presented, you saw what they're talking about, the AMLs. AMLs, that is the asset quality, the management sensitivity, the earnings, the liquidity of the institution. So such kind of information that if it is available to the regulator, it is very important information because it will help us also guide the operations and the portfolio quality of these institutions through implementing the Tier 4 legal framework and the issued guidelines. It will also bridge the information asymmetry because you realize that most institutions may have maybe 3 reports or 4 reports. They have a report for the shareholders, a report to show to the investors, a report for the regulator, and also their internal report for the board. So if we have a credit rating agency and it is a standalone independent institution, the way it was launched or recognized in the microfinance and the financial sector by Bank of Uganda, and as also UMRA, Uganda Microfinance Regulatory Authority, who recognized it. So it will bridge that information asymmetry between the regulator, the institutions, and the potential investors. I believe the institutions on the call, they will appreciate also the use of credit rating of their institutions to be able to access financing from the international investors. Thank you so much. I beg to submit.
Thank you very much, Rachel. This would be an opportunity if probably we're in a room, we would give you a very, very heavy and very big hand clap because I don't think we can say anything much better or bigger than what you've just said. Colleagues, I think now we are trying to get the discussion, the niche of the discussion that we have probably gotten what to hear from the Association of Microfinance Institutions in Uganda. We have now seen the discussion or had the discussion from the International Credit Rating Agency. This has also been summed up with the discussion from the regulator. Now, if we are in a saucepan, we are actually on the fire right now. And maybe if we need some firewood or we need some briquettes, whatever it is that you use, we just need to spark that light. And when we spark that light, probably it will have the fire come up. So the only people who can bring the light or who are seeing the light at the end of the tunnel, these are the people with the money. And the people with the money, I know you have been in our country or in Uganda in the financial ecosystem, the discussion is that money is expensive. The discussion is that money is hard to be gotten. The discussion is that the interest rates are high. The discussion is that, you know, everything about money is that money, the cost of money and money being accessible. I don't know if you're coming to tell us today that we are going to access money. We would expect to know if your access to money is easy. I don't know how long it takes, when it takes, but all I know is that you have an investment license, and we know that also a credit license. We know that you operate in most parts of the world. We know that the next presentations are people who are looking forward to expanding in the sub-Saharan Africa. And we are lucky that in Uganda, ICRA has managed to bring MORINGAWAY to make sure that we are on the target market of MORINGAWAY as investors. So allow me to introduce our partners from MORINGAWAY and make sure that at least you take it away as the name says. Thank you. Over to you if you can unmute. Jose and Israel, please, over to you.
Good day, everyone. Thank you for attending today's webinar. My name is Irshad, and I am the investment analyst at MORINGAWAY. And today I will give you an overview of MORINGAWAY, what we do, and how we operate. I am assisted by my colleague Josue, who will be attending to all your queries at the end of this presentation. Josue is a finance manager of MORINGAWAY and also an investment analyst. Over the years, there has been a significant boom in the microfinance industry. Not only has the industry flourished, but it has also changed lives of millions of people across the world. We are here today to explore avenues of professional cooperation with the MFIs in Uganda if you require funding to further develop your microfinance activities. So first, let's have a look at what is MORINGAWAY. MORINGAWAY is a company based in Mauritius and operates as a microfinance debt facility. It acquired its credit finance license in 2020. Our goal is to support socially responsible, financially stable MFIs, SMEs, and fintechs in undeserved markets to achieve optimum social and financial returns. We aim to make a considerable impact in financial inclusion by providing liquidity to institutions who work in the areas of rural finance or serve SMEs with a focus on the use of technology to improve reach and efficiency in their work. Our team at MORINGAWAY, we have a very competent team of individuals comprising of Rowana, Itske, Josue, and myself. Rowana is the CEO of MORINGAWAY and is based in New Zealand, while Itske is the COO and based in South Africa. Josue and myself are based in Mauritius. Our target market for 2024 is Sub-Saharan Africa. We also have clients in India and Southeast Asia. The aim of MORINGAWAY is to increase finance to microfinance institutions with a focus on rural and women clients and to smallholder farmers and SMEs. We believe in creating meaningful impact for rural and developing economies by financing a range of livelihoods, focusing on smallholder farmers, as well as companies working with SMEs. Our focus is on partners whose mission, clients, and products are aligned with ours. We also look at well-managed Par 30 with limited security given for debt and a proven business model. An ideal partner should be licensed and regulated, should have a balanced corporate structure, a strong corporate governance, and an equity to asset ratio of around 20%. The partner should also have transparent IT and operating procedures. We also look at external reports such as audit reports and credit rating. A rating by a renowned and independent rating agency such as ICRA provides us with significant comfort on the performance of the subject MFI and is a plus and is a plus both for us and for the MFI as it assists us in our assessment of the risk profile of the client. Let us now have a look at the general terms of debt provided by MORINGAWAY. Most of our debts are either senior debts or sub-debts disbursed in USD or in the local currency. The debt size varies between 200,000 US dollars to 3 million US dollars. In terms of pricing, we generally use the 91-day T-bill rate plus a margin of 4% to 10% for local currency. For USD, we use the 3 months SOFR plus a margin between 1% to 7%. The margin is based on the internal risk rating. In general, depending on our risk assessment, the tenor of our loan is between 2 to 3 years, including grace period on the principal amount. However, in the case of repeat loan, the tenor can be increased up to 5 years. Once the initial loan is fully repaid, our aim is to refinance. We shall now have a look at the investment or credit assessment process. In the clearance in principle phase, MORINGAWAY requests information from the prospective client and prepares an initial documentation for the clearance in principal meeting. This process also involves carrying out high-level KYC checks. The next phase is the CIP meeting. Moringawe holds an internal CIP meeting with its investment committee to carry out the initial appraisal. The feedback from the CIP meeting is given to the client. This process also involves asking the client any further information where clarity is required. An indicative term sheet is also issued to the client. Once the term sheet is signed and the commitment fee paid, on-site due diligence takes place. The investment committee reviews the documentation gathered and discuss key areas of interest. Moringawe requests for further information from the client where clarity is required. The loan approval is given by the investment committee and the final approval by the board of directors. The overall process generally takes around 3 to 4 months, depending on the complexity of the transaction. Currently, Moringawe has a portfolio worth 13 million US dollar spread across 5 countries and in 5 different currencies. For more information, you can contact us on the following email address and visit our website. I look forward to hearing from you guys soon. Thank you. And in Uganda, we say, we're balling you.
Thank you very much. At least you have done some good homework.
I can greet you in Uganda also. Jebariko.
But
Kare.
I believe that now you have just tickled most of the people who are here in this webinar today. And I'm very, very sure if we opened up our next session, which would be the Q&A session, I really want to give chance to some of these colleagues who are on this call today. And I think it will be an orderly manner, because I have seen through the chat, we have seen attendance from all over the country. We have seen attendance from, from Jinja. We've seen attendance from Northern Uganda, Eastern Uganda, Western Uganda, all the way from there. And most of you are asking, where is ICRA located? So colleagues, we are located at Jumbo Plaza. That is the Parliamentary Avenue on the first floor. And our contacts, our emails have been there. But feel free to always reach out to us. We have a local team that can support you at any moment. We have an international team, a very regional team that can support you at any moment. We work from Monday to Friday physically, but we are online anytime that you can contact us within the working hours. So, colleagues, I want to open up this discussion for question and answer. But before I can probably open up, I would like to really see if I can have at least some questions from the SACCOs. We have some questions from the microfinances institutions. And maybe we could do, I'll be guided here. Maybe I'll have my colleagues, Madame Vela and Mr. Zishan. Maybe we can see how we can coordinate this question and answer session. But mostly, I know that most questions are going to go to Moringawe. So, Moringawe, you be prepared. I know the regulator is here watching you, that you want to give money to the people they are licensing. I know the association is watching you. And I know there are owners of microfinances watching you. And
I think we have lost Laban. Sahil?
Yes, I can hear you, but I think we have lost Laban. Yes, could be some internet issues, I guess.
Hi, good afternoon, everyone. So I think this is the question and answer session, and we can proceed with the question and answer session. Me, myself, Vela, Mr. Sahil, and Moringawe team is here. Okay, the first question, it comes that how long does the process take for a credit rating process for the actual disbursement after the credit rating, the operational procedure? Ms. Villa, can you please take this question? Hello,
First
am I
question
audible?
is on the time taken to complete the credit rating. So maybe I will let Ikra or somebody to answer
Yeah,
that
sure.
question.
Okay, I will give it. So the credit rating process is it depends on the scope of the work. We have said the time we have received all the information from the date, it will take not more than 3 to 4 weeks to assess a detailed, comprehensive, and prepare all the, as per our methodology, we complete it, and we prepare and share the final draft with the issuer for the discussion. If the issuer is still having some queries or they are not agreeing with our outcomes, so ICRA team will always be there to satisfy and justify our ratings, and then it will go to the potential investors for their lookout. Our reports covers almost 90 to 95% of the information which any investor in this world is looking for. And it will be very easy to read it out and help them to understand them. I think it will be within a day's time that an investor can read it out. And definitely every investor has their own policies, internal policies, procedures. So it will take another, they might require another 4 to 5% of more information as per their internal policies and procedures to take a decision on that potential point.
Yeah, so for us, in terms of MORINGAWAY, obviously, if an institution is looking to obtain a credit rating, the institution can, in the meantime, also share their financial information to us. We carry out our initial assessment, as you saw in the presentation. So that initial assessment already gives us an indication on how the organization is performing. So we look more or less at the same principles as ICRA, as you spoke about the AMLs. So obviously we have our internal rating system to assess, but we look basically at more or less the same kind of ratios as you would be looking at.
The second question is from Evans. It is for you, MORINGAWAY, that unsecured loans can be will be considered as per your policy.
So we consider both. We consider both secured and secured loans. It all depends again on the strength of the organization we're looking at, but we do have unsecured loans also.
Nice. I hope that Evans, you got your response. Gerald, in situation where a company has not yet gotten ESG policy in place, can it be rated and be able to access funds for MORINGAWAYs? For the first part, I will answer. The second part, MORINGAWAYs will take care of that one. See, the credit ratings and ESG entity ratings are two separate things. Credit ratings for any kind of a funding or credibility or your position in where you are standing, what is your potential, what you are doing historically, and what are your plans. That is all covered in the credit rating, your business operating. And ESG ratings and assessment and your policies will be required where you're approaching for the green funds. The funds specifically allocated or allotted for the activities, for the projects which are linked with the ESG, environmental, social, and governance things. So MORINGAWAY, I will ask gentlemen that if they are also in that field, like women sector, children sector, education sector, environmental sector, like environmental, social, and governance side, if there are any funds and they have requirement for the ESG ratings. Over to you, sir.
Yeah. So yeah, if the entity has an ESG rating, then obviously it would be good. It would be better for them. But we do monitor other social measures, like how many women clients, how many women you have in the organization, what is the client, what does the client base look like, or the small operators. So we do have a couple of indicators that we look at, even though the entity would not have an ESG rating yet.
Great, sir. Wilbur, can the SACCO borrow from you, means the MORINGAWAY? And if yes, at what rate and what are the requirements needed?
So for the SACCOs, obviously we would need to look at the structure of the organization. We normally have a preference for organizations which are like incorporated, who have a legal structure. I mean, the pricing, as we said during the presentation, it's based on a couple of assessment that we have to perform when we do our initial assessment and when we do our on-site due diligence. But we will organize for ICRA to share the presentation, and you will get an indication of what sort of pricing levels we are looking at.
Great. Thank you. And the requirements. The second part is the requirements. Definitely you answered that one. And we said that if the ratings and the audited financials with the company profile, because our profile, our ratings covers qualitative and quantitative both sides, which any investor or any lender wants to see, and we connect and we assign weightages accordingly. And I'm sure that the rating methodology the investors have gone through with us, it will also support for the low cost funding if you have a better structure, better disclosures, and better ratings.
Yeah, exactly.
Am I right?
So, for example, if one of your clients has a AAA rating, then obviously the margin will be the lowest in the range. So it all depends on what the rating and what our assessment of that entity is.
Very right. The lower the risk, the lower the pricing, the higher the risk, the higher the pricing. And as Rachel says that this is the time that, okay, this is something is coming in this world and everyone is going for the rating. And we said MFIs, banks, SACCOs, corporates, they don't have to scare about the rating. They must go for that one. At one side, it is requirement or it is helpful for the assessment for the external stakeholders, but it is also very much beneficial for the internal stakeholders, the management, the beneficiaries, everyone, that where are you standing, and credit ratings can tell you that what are the gaps in your organization, then how can you reach and cover up those gaps to reach out to the international market or international investors. I think it's from Rachel that, hi, morning, will you kindly share with us the critical expenses involved in the accessing funds from you, both local and hard currency?
So normally we do both local currency funding and also USD funding. So it all depends which country we're looking at. Obviously, if it's a country where there's a high devaluation of the currency, every time we would be looking at requesting financing in USD. But then we do consider financing in local currencies also. And in terms of the cost, so you would have the interest on the principal, and we would charge a one-off processing fee at the beginning of the loan. That would only be the costs associated with our funding.
Yes. Okay. Thank you very much.
I
I
think
think we.
there are some questions, Laban. We have to some questions we have to go very quickly. There's a question, Morningway, that said if credit rating has been done, then how long it will take you to assess and give your feedback on the loan and assessment.
For the initial assessment, it would take, I would say, maybe 4 weeks, approximately. Sorry.
4 weeks time. 4 weeks time. So it will take a 4 weeks.
I mean,
time.
if all the information we require is available quickly, and if the institution has just done its rating, so we would presume that they have all the information ready for us to assess. So it would not take that long to carry out the initial assessment.
I can
say 3 to 4 weeks.
assure that if the credit ratings are available, so within a week's time, you will get the feedback from the investors.
Yeah.
Nice. How much is the interest rate? We have already Morningaway answered that one. Currency questions we have there. Is it possible to go through the same process that once applying for the credit rating document at the same time applying for the loan? Patrick, that's something you'll think that, okay, you're doing credit rating to reach out to the one so they can get a clear one. It's up to you that, okay, how you process that one. What is the interest rate in terms of payment? Definitely, Morningaway already gave that answer that it depends on the ratings, it depends on the structure of the company and the loan and tenors. How will be hedged against the forex in case the loan is providing foreign currency? So Morningaway, do you have any hedging solutions if the foreign currency loan has been granted to any local entity?
So we do not presently have internally a hedging process, but we have contacts. I don't know if the guys are aware of TCX or MFX, or what some of our clients do is they do a natural hedge by placing that foreign currency with their local bank and taking a local currency loan. So there are certain avenues of hedging, which maybe at the time of considering the facility, we can normally discuss with the client.
Right. There's a question that what are the costs associated with the provision of credit rating services for the MFIs and SACCOs? So actually, first thing first, that ICRA is domestically based over there, and we understand the market very well, and our pricings are quite competitive from the other international rating agencies who are providing, because we understand the market. We haven't fixed our pricing. It's all about the scope of the work. The smaller the entity, the charges will be lower. The bigger the entity, definitely, as per the scope of the work, the bigger the pricing. For that thing, I will request to reach out to ICRA for initial some documents, so our team can assess and provide you our quotes on that side. Secondly, the ratings are valid for 1 year. It doesn't mean that one rating report will be only eligible for one investment firm or going to there or one time of a loan. Till the time the rating is valid within 1 year, if you got 1,000 opportunities to reach out to the investors, you can reach out. And secondly, ICRA will also share your credit reports to our partners, investment firms. Does it require collaterals, security? Morningaway gave this answer. They can consider both secured and unsecured loans. Are the funds lent into dollar? Are you mitigating your risk? I think it's related to the hedging or highly or a high credit scoring. It is all together internal policies of the investors on that side. Wilbur, do you have unsecured loans for SACCOs? You already gave this answer. From Mr. William from Association of Non-Deposit Taking Microfinance Institutions. Thank you, sir, for joining. What are the requirements for joining the association? This is, sir, for you. Does funding to women carry preferential pricing? If yes, to what extent? it is related to ESG, and ESG has green funds. Definitely, they are much cheaper. Are cheaper than the conventional loans. And yes, if you have a proper policies, if you have a good rating and pricing, and your activity is going good, so definitely it will lead you to much cheaper pricing funds. Is it possible to start the process right away? Definitely, yes, it is. Reach out to ICRA and we will kick off. Our experts are available 24/7, and you can, because we have a global operation, so you can reach out to us anytime. Are you loan products having the same interest rate and same duration? Just open-ended that, okay, what is the question actually?
I mean, depends if it's local currency or if it's USD, they would have different rates. In terms of duration, normally our first loan to an entity would be 2 to 3 years with a grace period varying between 9 months and 1 year on the principal. Once we have established that relationship with the client, then we can consider a longer term loan with the client. And again, obviously, if the client is rated, it has a good rating, then we may consider also a slightly longer tenor for the first loan.
Great. We have second MFI who are interested and to initiate the process right away. So Mr. Enas, you have the information, contact details of Ms. Bella. You can please contact her right away, and then we will facilitate you. You will have our contact details in presentation. My email is, okay. I will ask my team to please note down this one to Josu and please contact them. And Irshad's email is okay. That's the MORINGAWAY email addresses over there. Kindly share the requirements to, okay, that's the information. Please mention your main, you are a consultancy firm. The clarity, as we said, that ICRA is not the consultancy firm, we are the credit rating agencies. I think it's done, yeah. We have covered all the questions. Sahil, over to you. We have done
Yes.
the question answer.
Yeah. I think there was just one thing here that Mr. Brian is mentioning, that I want to get this clarity. Does MORINGAWAY also relies on ICRA ratings, or they have their own ratings they use? So yes, see, I mean, MORINGAWAY and ICRA has a partnership. So in a way that MORINGAWAY relies on the local credit rating agencies, which is ICRA. But it doesn't necessarily mean that MORINGAWAY cannot rely on other rating agencies' reports. But we being locally and with an international presence, it makes sense for MFIs and SACCOs who's based in Uganda to get ratings from us, because we understand the local market. And when we talk about the price sensitivity, when we look at the other rating agencies, so, most of the institutions in Uganda and Tanzania doesn't even qualify for those rating agencies. So we come as a local rating agency with an international presence and with the international investors. So there is nothing better than ICRA at the moment in the market, who can provide those accurate and credible reports to the investors that will help you eventually with your funding and investment processes. Over to you, Laban. I think that is bringing us to the close of presentation. And any final remarks? Over to you, Laban. And I think we've got NIC as well waiting for some remarks.
Yes, thank you very much, colleagues. And Zishan, thank you very much for taking us through the question and answer session. However, I saw that there were some that were not questions. They were not, there was more feedback. There was more requests. We are seeing them. We're seeing them live. You're saying you want conferences, you want this. We are bringing a basket of fruits for the financial sector. You just have to choose which fruit you want. Do you want a pineapple? Do you want lemon? Do you want whatever it is you need? We have it as ICRA. So be ready for an action-packed situation. So before I can now say that I have been holding you for the past 1.5 hours. That's the time I wanted to hold you, actually. So we are right in time. We are not anywhere far away from time. I hope that within 1.5 hours we shall be done. we would like to hear from a partner also on board who has managed to interact with SACCOs. As we have interacted with microfinances, we have seen SACCOs also interacting with this partner, and that is the National Insurance Corporation, the NIC. It's called NIC. I would like to understand from the perspective. I know, Anthony, you are on call, and I think you're about to get unmuted. We have had interactions. We have known and made up plans with the central bank, with other regulators on how we can streamline this ecosystem of SACCOs. How about you give us just 2 minutes of your time and tell us what you think would be ideal from the side of where you stand, your position. Then we can probably close in the next 5 minutes. Thank you very much.
Thank you, Laban. Thank you, ICRA. I normally prefer to call it ICRA.
That's
see
right.
Most of you are saying ICRA. ICRA sounds good for me. Thank you, Moringaway. I hope I've gotten that right. And the regulator for the SACCOs and MFIs present, and all friends and colleagues. Thank you, ICRA, for arranging this chat and talk about the possibility of rating our SACCOs and MFIs and institutions like that, while at the same time opening a way for these institutions to, to get about the possibility of accessing financing. My name is Lubandi Anthony, and I serve as the team lead here at NIC Life. And part of the work that we do has put us in close contact with a lot of SACCOs, MFIs, and like institutions. And a lot of the feedback that we got from our clients and potential clients was that because of the growth in the economy, they were facing a bit of reduced liquidity. A couple of those were saying, okay, we've got the business, our members want the money to borrow it, but we do not have enough. And at the same time, we had started working with the Laban and ICRA. So we reached out to Laban and said, hey, there could be an opportunity here. What can you do to answer a gap? So ICRA and Laban, thank you for letting the SACCOs know that they can actually access funding when they need it. I love the presentation by the regulator. I think that was Rachel, and a bit stating why her regulators, if that word exists, and why they need to be rated. While she was speaking, a couple of things very, very quickly in 1 minute came to my mind, why a lot of the SACCOs that we have here and MFIs are not yet rated. A couple of them don't know that they could be rated. And thank God that has been answered today. A couple of them are saying, hey, we do not have money to get rated. And yet Moringa is saying, in a normal circumstances, we can give you the money and help you boost up your governance and get rated. So I'm just full of joy for you guys. Thank you for arranging this for us. To Moringa, when you extend a credit to any one of the guys on the call today, we will be available to be part of their risk management for the money that you will have extended to them. As you know, we are in insurance and we are management. And we can very, very ably assist the SACCOs, MFIs on non-deposit taking whatever entity you like, in the management of some of the risks that could befall the money that they are getting from Moringa. So to me, that is the one word I can give, especially the participants of today that are not yet our clients. We are available. We are walking the journey with ACRA in Uganda. Wherever that we've gone and we have our clients that are interested, Laban is always by our side to say, let's have a conversation. So
Yeah.
Thank you very much, Laban. And I am looking forward to having many of these. This one is just the beginning, but it's not enough. We need to do these shows a little bit often, maybe quarterly, maybe half yearly, as we take the message out that it is actually possible to have our entities rated properly so that the doors can be open to them to access bigger opportunities and funding. Thank you, everyone, and thanks, Laban.
Okay, thank you very much. And as we had earlier promised you, colleagues and members, we are not going to hold you at ransom. We have 3 minutes to close this session. And maybe our closing off would be, we really, really appreciate you for your time, for giving us all this in the morning of, this Tuesday morning, so that we can know that we are together. And we are, again, we shall say, we remain ICRA. And as you can see, our contacts are there on the screen that have been shared. We have a physical office. Visit our office at Parliamentary Avenue, first floor, Jumbo Plaza. Reach out to us. We have a team locally here. We have account managers that will help you. We have everyone who will be able to support you in each and every way. I look forward to seeing you again. Thank you. I remain Msingu's Laban Joshua. Over to you, and we close the meeting. Thank you.
So we also, on behalf of Moringaway, would like to thank all the participants to that webinar. It was a pleasure to be able to present our institution to you. I think ICRA will be organizing the sharing of the presentation that we made today. So you can get our contact details there, and you can contact us, and we can take it from there. And thank you, ICRA, again for organizing that. And AMFIU and also Rachel from the UMRA. Thank you all.
Thank you, guys. Just some last thing from me. I think there were a lot of questions around how we can start the process. So we have mentioned in the chat that please reach out to us at that email address, phone number, WhatsApp, phone calls, local numbers, or through our website. And we have the team who can just assist you right away. So thank you, everyone, for who's joined in today. And we wish you all the best, and hopefully we'll see you soon. Thank you.
Thank you.
Thank you, guys. Thank you, everyone.
Thank you, everyone. Have a good day.
Thank you, everyone. Thank you, Okra, and thank you, Moringawe.
Thank you, Rachel. Thank you, Rachel. Thank you so much.
Thank you. Bye-bye.